This is Nightly Business Report with Sue Herrera and Bill Griffin.
Flexing its muscle, the stock market extends its record run on new signs the economy is strengthening. From bad to worse, Boeing's troubles mount, but this time it's because the company launched its new space capsule into the wrong orbit. Finding value, it's not easy to do with stocks at new highs, but our market monitor has a list of names you might want to consider. Those stories and much more tonight on Nightly Business Report for this Friday, December 20th. Good evening, everyone, and welcome. Bill has the evening off. Stocks powered to new highs to finish the week, putting the major averages on track for a blockbuster 2019. The trade truce with China last week put investors in a buying mood, and the buying really hasn't stopped. Today, positive news on the economy helped lift sentiment, and by the close, the Dow Jones Industrial Average was up 78 points to 28,455. The Nasdaq rose 37, its seventh consecutive record close, and the S&P 500 added 15. All of the major averages were higher for the week. The economy appears to be regaining some of its footing. Today, we learned that household spending rose in November. According to the Commerce Department, personal income increased 0.5% and spending rose 0.4%. Economists say these numbers support a strong consumer, which has been driving the economy. And stronger consumer spending helped economic growth in the third quarter rise 2.1%. That, in turn, helped offset weaker business investment. Consumer sentiment rose in December. According to the University of Michigan Index, consumers are now more optimistic about current and future economic conditions. But will that feeling extend into 2020? Steve Leisman went in search of the answer.
When it comes to economic growth, Americans were feeling it in 2019 about as much as they have any time in the past 8 years. The CNBC All-America Economic Survey of 800 Americans across the nation finds that 48% say they felt real indications the economy improved a lot or at least somewhat. Only 42% said they saw only a little improvement or none at all. 10% unsure. While it's not the highest level that's been gauged, it's the lowest level among those saying none or little growth since the question was first asked in 2011. Like many of the responses when it comes to the economy, it's driven mainly, but not entirely, by partisan views. 77% of Republicans say the economy has improved a lot or somewhat, compared to just 28% of Democrats. Independents, right in the middle at 44%. For the 2020 outlook, the survey asked, is next year a year for expansion and opportunity for you and your family, or a time to hold back and save because harder times are ahead? 35% took the rosy view of 2020, the highest since the question was first asked going back to 1998. Still, 52% remain concerned and say they'll be holding back, maybe a sign of underlying caution in the American psyche when it comes to the economy. Just about every demographic group is net negative in response to this question. Among those who are positive, Republicans, those who will spend $1,000 or more for the holiday shopping season, and those who think now is a good time to invest in stocks. For Nightly Business Report, I'm Steve Leisman.
The market may have been up even more today if not for Boeing. Shares fell more than 1.5% after a 1-2 punch of negative news. Boeing's Starliner rocket failed a key NASA mission during its first trip to space. We'll have more on that in just a moment, but we begin with its troubled 737 MAX. United pulled the plane from its schedule again, and now the MAX will not be back in the United fleet until the start of the summer travel season. Phil LeBeau has more.
With the grounding of the Boeing 737 MAX expected to stretch several weeks into next year, United Airlines is pushing back plans for the plane another 3 months, so the airline won't fly the plane until June 4th, 2 months later than Southwest and American. With MAX planes set to be grounded for more than a year, cancellations are piling up. In fact, U.S. airlines have now scrapped almost 150,000 MAX flights. And it could go even higher, since the head of the FAA says there is no timeline for approving fixes for the troubled plane. As a result, Boeing is halting MAX production next month, and so is Spirit Aerosystems, which builds the MAX fuselage. At the company's plant in Wichita, Kansas, there are already 100 MAX fuselages that have been built but not yet delivered. Meanwhile, it's still unclear if GE Aviation which builds MAX engines in partnership with a French firm, will slow or shut down its engine production. Will the bad news for Boeing and the 737 MAX finally come to an end in the new year? Well, it's too soon to tell, but almost everyone agrees the 737 MAX will fly again. The question is when. Phil LeBeau, Nightly Business Report, Chicago.
Space is also a part of Boeing's business, but we don't often focus on it. Today we are, after its Starliner spacecraft failed on its first launch. Morgan Brennan is at the Kennedy Space Center in Florida.
Now 15 seconds.
It was a critical test Boeing hoped would end 2019 on a high note. Instead, a setback for its Starliner spacecraft.
The Starliner itself, on its way to the International Space Station, had a challenge.
The unmanned launch took place just before daybreak at Cape Canaveral.
And liftoff, the rise of Starliner and a new era in human spaceflight.
And went according to plan. The trouble arose after Starliner separated from the upper stage of United Launch Alliance's Atlas V rocket, when an automated timer error prevented Starliner from reaching the orbit necessary to meet with the space station. In a statement, Boeing saying, quote, further root cause analysis is needed, and that, quote, the combined Boeing and NASA team now plan to work together to define test flight objectives for the remainder of the mission while preparing the Starliner landing. Boeing and NASA officials saying if humans had actually been on board, they would have been safe the whole time, and that the journey to the space station may have still continued as planned, something NASA astronaut Nicole Mann, who will be on Starliner's first crewed flight, detailed.
This vehicle is a new level of automation that we've never seen before. And so what we're really doing is we're testing that automation, and that's why you have test pilots on board, especially for these early missions. That's our job. That's what we're trained to do.
Still, the setback in Boeing's defense, space, and security business coming during another tough week for the aerospace giant on the commercial side, as it halted 737 MAX production. With the timeline for Starliner now set to slip even further, NASA Administrator Jim Bridenstine says there's no doubt there will be financial impact.
When there is a setback, obviously that can have a feedback when it comes to maybe a provider not being able to win the next contract, whether it's NASA or some other commercial company that wants access to space for the value of microgravity. So that's up to those commercial companies to figure out.
Starliner is part of NASA's Commercial Crew program alongside SpaceX, which has one more safety test of its own before humans can ride in its Crew Dragon capsule. For SpaceX, the first manned flight is expected early next year. As for Starliner, it's unclear what the next steps will be, with the focus right now on bringing it back to Earth as soon as Sunday.
It's not a failure. I would say it's certainly something that we wanted to see happen, but it's also true that we test for a reason, because we want to be able to learn these things that we need to learn so that when we do put humans on board, they can go and be safe.
For Nightly Business Report, I'm Morgan Brennan at the Kennedy Space Center in Florida.
It is time to take a look at some of today's upgrades and downgrades. Kellogg was upgraded to buy from neutral at Bank of America Merrill Lynch. The analyst cites improved sales growth, which should help profits. The price target is $70. The shares rose more than 2.5% to $68.64. Dunkin' Brands was upgraded to buy from neutral at Guggenheim Securities. The analyst says the remodeling of stores will help increase their sales. The price target is $83. The stock was up nearly 2% to $74.98. Michaels was downgraded to underweight from equal weight at Morgan Stanley. The analyst cites declining comparable sales and rising competition. The price target is $5. Shares of the small cap stock dropped nearly 8% today to $6.17. Meantime, something caught our attention in Nike's earnings report. Yes, they reported better than expected profit and revenue, which we told you about last night. But the company also said its Michael Jordan brand had its first ever billion-dollar quarter. Not bad for someone who hasn't played professional basketball in more than 15 years. Jabari Young is the sports business reporter for CNBC.com, and he joins us now. Jabari, welcome. Pleasure to have you here. What is it about the Jordan brand that continues to drive it to these record levels?
Well, first of all, thanks for having me. Sitting next to a legend, I appreciate that. But, listen, so it goes back to the Jordan brand has a history. It's perfection. I was talking to a PR person today. that represented Jordan Brand at one time, and they said, listen, they're like Disney. Everybody knows what the Jordan Brand is. When you walk into stores, you go into clubs, you go into lounges, most times you look at people's feet, particularly younger people, even older, they have on a pair of Jordans if it's a pair of sneakers at all. You don't see those other brands as much as you see the Jordan Brand and Nike. And I think that history, the perfection, the fact that people know what it is. Right. I owned a pair of Jordans. I looked at my closet one time. I said, oh, my God, I got over $2,000 worth of Jordans in my sneaker in my closet. And that's because, you know what? That's the brand that we recognize, especially a young urban guy coming from North Philly. I wore Jordans. That's all I wanted. You go to school, you had a nice pair of Jordans, a new pair of Jordans. Listen, you probably
rocked.
Yeah, you
right?
rocked. You were the man. You got a date. Everything was fine. So listen, the Jordan Brand. I mean, that's what it is. That history. They're connected to the culture. They're connected to hip hop culture. And as long as they present and continue to uphold that, I think they'll never go anywhere. So it's not surprised that they got that $1 billion quarter.
But compare it to like the shoes that Steph Curry put out, or the shoes that LeBron put out, which were also hot. Yeah. But differentiate it for me if you can.
History. People don't, listen, LeBron sneakers, good. Steph Curry is coming, okay? Listen, Puma, I love Puma. They're on a rise. Adidas is also in there, but they're not touching Michael Jordan and Nike right now. That's the #1 brand. That's perfection. The difference is that, as an agent told me, that when you sign over to the Jordan Brand as a player, you got to recognize something. That's not your brand. It's Michael Jordan's brand. You're just a part of it, and you won't be. Kawhi Leonard's a classic example of that. Went over to the Jordan Brand. Now he's with New Balance. But, you see those other brands coming, but they don't have the history. They don't have the culture. They don't have the impact that Jordan has, and that's exactly why Jordan continues to see success and will for a long time.
Well, congratulations to them. Yeah. Jabari Young, thanks so much.
Thanks for having me.
Appreciate it. Well, still ahead, big changes could be coming for millions of California workers on January 1st, but it's not entirely clear what those changes are. The UK Parliament is moving forward on a Brexit bill, all but assuring a January exit from the European Union. Members approved the withdrawal agreement that Prime Minister Boris Johnson negotiated with the EU in October. Today's action paves the way for Britain to leave at the end of next month. A new California law goes into effect on January 1st that could change the way millions of people work. It was designed to protect so-called gig economy employees, but there could be unintended consequences for many more who live and work in the world's 5th largest economy. Deirdre Bosa is in San Francisco.
On January 1st, California will implement a bill that could upend the gig economy. Assembly Bill 5, also known as AB 5, will require employers in industries like ride-sharing and food delivery to reclassify independent contractors as employees. It could change the employment status of more than 1 million workers here in California. Right now, though, less than 2 weeks from its implementation, there's more confusion than there is clarity.
No, I don't. I didn't even know about an AB 5 bill. What's it consist of?
All the drivers, such as Uber and Lyft and DoorDash delivery drivers, are covered under AB 5 bill.
I'm not 100% certain, but if that's the case, I will probably say bye-bye, because I don't think they're going to give me what I can actually make potentially as a salary.
The law is meant to empower gig economy workers and give them protections they haven't had access to. But at the same time, it could hinder their flexibility.
I think the most important thing is people should have the opportunity to decide if they want to be an employee.
There are carve-outs for contract lawyers, doctors, and engineers, but not so for truck drivers and freelance journalists. Uber, Lyft, and DoorDash, failing to secure a carve-out for their drivers, are vowing to spend $90 million on a ballot initiative to counter the effects of AB 5. Meanwhile, Uber and Lyft have added the bill as a risk factor in SEC filings, as analysts predict it could cost them hundreds of millions of dollars. Uber and Lyft say that their drivers will remain contractors when the law goes into effect, likely leading to a slew of lawsuits. What happens here when AB 5 goes into effect will have important implications for the gig economy in the rest of the country. Other states are considering similar legislation, and California could be just the beginning. Nightly Business Report, Deirdre Bosa, San Francisco.
Matthew Bidwell joins us now to talk more about what this could potentially mean for workers and the overall economy. He's a professor of economics at the University of Pennsylvania's Wharton School of Business. Matt, welcome. Nice to have you here.
Hi, how are you?
I'm great, thank you. Medium term, short and medium term, net, what impact do you think this will have on the overall economy?
I mean, on the overall economy, I would have thought tiny. Although we see more gig workers than we used to, they're still a fairly small fraction of the economy. And the proportion of them that are going to be affected by this, probably even smaller. So it's going to be very disruptive for small numbers of people. If you're affected, this is a big deal. But I think overall economy, it's not going to,
and for the
have a massive effect.
For the San Francisco economy, which is sizable, do we know yet what the impact might be?
We don't. I mean, as the report mentioned, there is a sense that the big companies that use these contractors potentially are going to see major new costs. Assuming that they actually do reclassify them as employees, I understand it. Uber and Lyft are sticking to their guns and saying these people are contractors. So in the immediate terms, it's going to be more about lawsuits than it is about kind of concrete costs.
So but
there is a potential for big costs.
If you had to divide it up into winners and losers, would you put employers strongly in the loser category?
Yes. I mean, some of these companies have created business models based on the idea that they can treat these workers as independent contractors, and they potentially are going to see big costs. Some of those costs may come down as they figure out how to organize their work around treating people as employees, but in the short term, yes, they face costs. That's why they've been fighting this.
So who are the winners? The individual employees, depending on how they view themselves?
Absolutely. I mean, I think in the government survey that was done a couple of years ago, about half of the people working as contractors, contingent workers, said that they wanted to be contingent workers, and about half would rather be in regular employment relationships. Those people who are kind of forced into this, who would rather be regular employees, they're big winners. I think the other people who are likely winners are people whose employers might otherwise be thinking about, could we cut costs by making these people contractors instead? And so I think the fact that you don't have this kind of competition from low-wage contracting could be good for a larger number of people as well.
Matthew Bidwell with the University of Pennsylvania's Wharton School of Business, thanks for joining us tonight.
Thank you.
Strong results for BlackBerry. That's where we begin tonight's Market Focus. The provider of security software and services beat analysts' expectations thanks to strong sales in its patent licensing and cybersecurity businesses. The company also saw sequential revenue growth across all of its software units. Shares climbed more than 12% to $6.53. Revenue growth at Winnebago was much stronger than expected thanks to a rise in demand for its motorhomes and its towables. The company says it's benefited from its recent acquisition of RV firm Newmar and has now topped analysts' earnings estimates for 7 consecutive quarters. The stock gained nearly 8% to $51.91. A mixed quarter for CarMax. The auto retailer reported better than expected revenue thanks to strong comparable dealer sales and a rise in used car sales. But the company fell short of profit estimates due to higher expenses. The shares slid more than 6% to $92.71. And Merck received approval from the FDA for its Ebola vaccine. This marks the first FDA-approved vaccine for that deadly virus, something Merck calls an important milestone. The vaccine was approved by the European Commission last month. The stock was up nearly 2% to $91.58. Well, all week we've been getting you ready for the new year by bringing back some familiar Market Monitor guests. Tonight's guest is a 5-star value fund investor, and he has 3 names he says belongs in your portfolio. The last time he was on, he recommended Johnson & Johnson, which is up 48%, Chevron up 51%, and Intel is 114% higher. Joining us once again is Randall Ely. He is the president and chief investment officer of the Edgar Lomax Company. Welcome back, Randall. Nice to have you here.
Thank you. Good to see you.
So you are still finding some value out there, even with the market at all-time highs?
Absolutely. When you have Treasury, and this is 10-year Treasury, interest rates at less than 2%, it makes stocks more attractive than would normally be the case.
First pick is Allstate. They've had a strong year. We've had a number of natural disasters, but they've been very resilient in the face of that.
That's right. And I think many value players assume that having a strong year in price means you can't have a second strong year. But this is a cheap stock still. They've got lots of cash, strong financial position. And the fact is that they don't have to grow earnings over the next year to be a good investment.
How long would you typically hold some of these stocks?
We buy nothing unless we think we can hold at least 3 years. But ideally, we'd like to hold for 10 years or longer.
Okay. Exxon, next on the list. The energy sector has had really tough sledding, though.
That's right.
Why do you like Exxon at this point?
Look, here you're getting a 5% dividend. So the management is talking with their action. But the fact is, energy prices are not going to go down forever. So you had oil prices down on average, and so earnings slid. People see it as a high PE stock because it's 20, but the fact of life is all you need is oil prices to bounce a little, and suddenly you bought it at a much lower than normal PE.
And Pfizer is facing some concerns about the loss of patents on some long-time selling drugs. They certainly are not the only drug stock to be facing that particular challenge, but you find other reasons to buy it, the pipeline.
Yes, this is a company that they have a culture of dealing with these challenges that drugs go off patent, and they have drugs in the pipeline, and they're also looking at what others are doing. They also have a very strong financial position, so they can withstand the ups and downs of this market.
And what about the dividend?
Brother, what I like about them, you get a low PE ratio, 14, and a high dividend yield, about 4%.
Very quickly on the market. Do you like the market overall?
Generally, I would be afraid of it because of valuation. Price to book ratio, 3.5%, almost twice normal. But the fact is, it's the fourth year of the 4-year cycle, and that's usually good for stocks. Also, the Fed is very easy. That's good for stocks. So I think it should be a sane market, but be prepared for something worse than
volatility?
Yes.
Because of the election year coming up, or just the fact that we're at these lofty levels?
The fact we're at the lofty levels. I think the election year actually should be helpful.
On that note, thank you so much, Randall.
Thank you.
Nice to have you here. Randall Ely with the Edgar Lomax Company. Coming up, the world's biggest gaming mecca turns 20, but the next 20 could look a lot different. The convenience store chain Wawa was hit with a large-scale data breach, potentially affecting all of its locations. Malware was discovered on the company's payment processing servers earlier this month. Now, the company says the card information was swiped, including credit and debit numbers, expiration dates, and cardholder names. It is unclear, however, how many customers were actually affected. Macau, a former Portuguese colony, was handed back to China 20 years ago. And since then, the small city has become a major force in the global gaming economy. Contessa Brewer has more.
Chinese President Xi Jinping is in the world's biggest gaming mecca of Macau to mark the 20th anniversary of the region's handover from Portugal to China. He's praising Macau's polite behavior in what's largely perceived as a rebuke to Hong Kong's disruptive protests. And he's dangled the promise of fewer financial restrictions for the special administrative region. Just this week, expanding the amount of money gamblers can take from Macau to mainland China. Though gaming analysts here say it would have had more impact for money to freely flow the other way. There have been reports Beijing will establish a securities exchange center in Macau, denominated by the yuan, in an effort to diversify Macau's economy beyond gaming. Sources in the gaming industry told me it seems particularly ambitious. They see it as a shot across the bow to Asia's finance center, Hong Kong. Lawrence Ho talked to CNBC Asia about the possibility.
As Macau continues to integrate within the Greater Bay Area, there are more and more opportunities. And if the renminbi stock exchange or that comes to materialize, I think that's another avenue for Macau to diversify going forward.
Casino companies themselves are working to expand beyond gaming with huge investments in cultural institutions, dining, and entertainment. Wynn Resort CEO Matt Maddox says, "We believe the investment we are making in our transformative Crystal Pavilion expansion in Macau, coupled with the government's policies to accelerate growth in the Greater Bay Area, makes us even more optimistic about the future of a diversified Macau economy." The casinos are due for concession renewal in 2022. In the here and now, the visit by Xi Jinping is expected to hit casinos' December revenues particularly hard because of restrictions on visas and limits on overnight visits. Sources tell me December's looking like it will be off 14 to 17% for the full month, and the valuable VIP segment is down more than 30% year over year. That's largely due to the Beijing policies cracking down on junkets that bring those lucrative high rollers into Macau. Casinos with exposure to Macau have a reason to celebrate 2019. Their stock prices have all exceeded the broader S&P. For Nightly Business Report, I'm Contessa Brewer.
And before we go, let's take another look at the record day on Wall Street. The Dow was up 78 points. The Nasdaq rose 37, its seventh consecutive record close, and the S&P 500 added 15. All of the major averages were higher for the week. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great weekend, everybody, and we'll see you Monday.